Hey, welcome back. It's July 19th and what a wonderful week that we've had. An awful lot of positive news and sentiment is brewing in the marketplace to do with crypto industry, now the stablecoins and Bitcoin. So I'm going to be touching on the aftermath of the signing of the US Genius Act by President Trump and his team yesterday. Also, there's an interesting revelation triggered by one of the leading stablecoin private issuing firms. So I'm going to be touching on that. Also, I'm going to be raising some real world asset tokenization coin projects that I need to bring to your attention, which is picking up momentum. And then I'm going to round off with a couple of interesting charts around the sentiment on the leading digital commodity asset. So let's jump into the details. So what does this Genius Act signing by Trump yesterday, what would this all mean in practice? Now, let's go under the covers because, as I said in the intro, an awful lot has happened at Capitol Hill at Washington. So it says that the Congress Crypto Week reached a climax today. This was yesterday, July 18th, as the House passed 3 historic bills prescribing the regulation of digital assets and the future financial economy. The Genius Act on stablecoins will now go to President Trump's desk. It is the first ever crypto law that's been passed through the US Congress. Now, yesterday, there was another YouTube clip that I've seen where President Trump have actually signed the US Genius Act. So as of today, it's now passed as law. So that is in full enforcement. The next on the list is what it says here, the Clarity Act. This actually covers the market structure, as it says here, now ascends to the Senate, where Tim Scott, chairman of the Senate Banking Committee, said he wanted to finalize the law by September 30th. The Senate Agricultural Committee, which will also need to pass the bill, held its first hearing on the topic earlier this week. Now, the Clarity Act, it really lays out the market infrastructure for how the US pretends to govern all of the digital asset tokens, not just stablecoins, which is already approved and signed yesterday by Trump on the Genius Act. So stablecoins is clear on that. But what's left in pending is what to do with the rest of the digital asset tokens that forms a lion's share of the entire crypto industry. And this is actually, for me, the second most important bill out of the 3, because this is what's going to give increased clarity, as the name suggests, provides regulatory clarity on how the US pretends to govern the digital asset tokens, the rest of the digital asset tokens in the US. And this is important because without it, you won't see any fintech players coming into the US to establish the business, to bring the jobs, so to entice those youngsters, blockchain programmers, blockchain consultants to settle in the US in order to implement the Clarity Act. So this is why there's an awful lot of pressure now for Trump to ratify the Clarity Act bill at the US Senate. It's already been approved in conjunction with the Anti-CBDC Act at the House this week. What's left to do is to ratify both the Clarity Act and the Anti-CBDC at the US Senate. So this is very important. And why we are talking about Anti-CBDC, you might have thought that by now it's a thing in the past. Well, as it currently stands at the moment, the CBDC, there is still a low possibility of a CBDC to be established in the US. By having this Anti-CBDC law or regulation to prohibit any attempts of creating any CBDC currency, any central bank digital currency in the US by the Fed, well, that is the emphasis of this third and final US crypto regulation. The chances for this to pass is extremely high because if you recall, one of many pledges set out by President Trump during the presidential campaign is to ban the creation or any attempts to create a US CBDC, a digital dollar, by the central bank, by the Fed. So that is the repercussion of signing these 3 important US crypto regulation bills. It's almost there, and I expect pretty much by Christmas to see all 3 to be approved at the US Senate and then passed into law. Now, what is that announcement that I've alluded to at the earlier on? As a result of the signature of this Genius Act by President Trump last night, Tether CEO says he'll comply with Genius to come to US, and Circle, which is Tether's competitor, number 2 competitor in the stablecoins private issuance space, says it's set now to follow as well. Paula, who is Tether's CEO, said his firm will come to the US, is chasing high-level auditing and will adjust reserves. But Jeremy Allaire said Circle is already compliant. So this is actually very, very important, because now that we have the Genius Act passed as law in the US, there's going to be that race to the finishing line by Tether to comply the final regulatory hurdles to become compliant with the Act, with the Genius Act, as with Circle. Now, between Tether and Circle, so Tether stablecoin, which is a fiat-backed stablecoin on the US dollar, it's USDT. The Circle equivalent of that is USDC. Between the two, they take well over the lion's share of the entire global stablecoin industry. We're talking about well over $100 to $140 billion worth of AUM, assets under management, between these two private stablecoin issuing firms. So this is very important to have these two major players to be compliant with the Genius Act, so they can bring their companies domiciled in the US, established in the US, bring in the capital, the talent, the business, so they can also take leverage of the tax relief, which we all know that Trump is providing as candy to bring back the companies onshore in the US, to enable the US to become that crypto capital wealth. So this is really important for these two major stablecoin private issuing firm giants back in the US. So I would see this an important announcement, as just a question of time now for both Tether and Circle to finalize their compliant hurdles to become fully compliant with the Genius Act, so they can bring back their companies back in the US. Without any shred of a doubt at all, there'll be other mid-tier stablecoin private issuing firms to also follow suit. So this is a great bullish sentiment that the stablecoin industry now is alive and kicking, and we're going to be seeing a lot of liquidity drawn into the stablecoins. As I said before, stablecoins has always been that important gatekeeper, bringing in the TradeFi fiat wealth into the digital payment rail systems, which are stablecoins. Stablecoins, not to be confused with digital commodity, which is Bitcoin. Stablecoins are more like the medium exchange asset, because you can't make money out of it, because it's always going to be pegged one-to-one between the stablecoin, let's say Tether, with the underlying US dollar. You can't make money. But using the benefits of blockchain, which you can always refer to many of my videos in my channel, which is all the more reason why you ought to subscribe to learn a little bit more about what are stablecoins, what are CBDCs, what's the difference between those and Bitcoin, and indeed other digital security tokens, right? And so on. So tap into that resource to learn a little bit more. So stablecoins for me are ultimately going to be handling medium of exchange type transaction settlements on chain, on the blockchain. Whereas for me, if you want to hold on to your wealth, your digital wealth into the long term, and thinking about your next of kin, then you should certainly allocate part of your fiat portfolio into Bitcoin and hold it on to long term. So an important announcement that's been made here. If we move on to the side of the Bitcoin, then we are seeing again more Bitcoin treasury firms unfolding, making these announcements pretty much every day, billions upon billions of dollars allocation from their corporate reserve into Bitcoin. So before Bitcoin strategy, which has been created and laid out by Michael Saylor and his strategy firm, used to be called MicroStrategy, what has always been the corporate playbook for public listed companies particularly is how they deal with their money. What were the major assets in their corporate treasury reserve? Usually junk bonds, so things like US Treasury bonds. Cash is always a major component asset in any corporate treasury in the balance sheets, and some other intangible assets. As a result of the emergence of this Bitcoin strategy, they've completely changed the actual composition of what a sound corporate treasury reserve ought to look like. So he's created and spearheaded this notion of, instead of holding on to your undervalued assets like cash and junk bonds, which don't yield any favorable rate of return, in fact, is always going to be less than the true rate of inflation. I'm not talking about CPI, I'm talking about the true rate of inflation, which is in a double-digit teen, not this 2 to 3% CPI, which fallacy. So what has Saylor's done is we should move away from having huge amounts of cash, huge amounts of corporate junk bonds, whether it's treasury bonds or indeed other corporate bonds in our corporate reserve. What he's trying to do is, let's be smart about it. We all can agree that those assets are always going to be under the true rate of inflation. So we're going to be in the negative yield territory. And how can we counter that into one of positive yield, which is to allocate part of that into Bitcoin, hold into the long term. And if there is an opportunity for those companies to issue debt in order to buy more Bitcoin to be held in the corporate treasury reserve, that is what the Bitcoin strategy is all about. And this is why we are seeing a huge amount of companies, whether they're public listed companies or private, we're seeing every single day brand new announcements from Bitcoin treasury companies issuing debt to buy more Bitcoin. So in the case of this article here, it says Adam backs Bitcoin treasury firm to go public with 30,000 Bitcoins and a whopping $1.5 billion in buying power. The named Bitcoin Standard Treasury Company, as it's called, or BSTR, which is its ticker, the company is coming public via an SPAC merger with Brandon Lutnick's Counter Equity Partners 1. So again, we're seeing the same old. A lot of announcements like these, whether there are brand new IPOs coming on fold saying we're going to be injecting thousands upon thousands of Bitcoin, which would equate to this amount of debt, to buy that and then put that in its corporate treasury reserve. There's another one that's, again, the same sort of line. It says another company that's adopting the Bitcoin strategy, which is Volcon announces over 500 million, so that's $500 million of private placement to initiate a Bitcoin treasury company. So we are seeing an awful lot of, as I said before, a lot of announcements of public traded companies or even private equity firms investing part of its capital, fiat wealth, into Bitcoin and keep that in their corporate treasury reserves. We are seeing in this another interesting chart. This is one of my favorite charts because it really signals that continuing bullish sentiment on allocating into Bitcoin. We are seeing during the course of last week, we have actually toppled, and this is actually in the millions of dollars. So we've got $1.1 billion, right? This is actually phenomenal, right? It's absolutely, this is the first time we've seen in a single day over $1 billion of capital net new money inflows into the 11 US Bitcoin spot ETF funds. This has never happened before, and I've been following this chart for many months now, ever since its launch back in January 2024. And these 2 days, July 10th to July 11th, each of those days we've seen $1 billion plus of capital net new money into these spot Bitcoin ETFs, always headed by IBIT, which is BlackRock. And then during the last Friday, it's been over 300 million. On Thursday, it's been almost $500 million. So you can see the trend is rather clear. We're going to be seeing more capital net new inflows into these Bitcoin spot ETFs, particularly who are behind these kind of capital inflows. We're not talking about retail investors. We're talking about corporations, because particularly publicly registered companies are the major purchasers of these Bitcoin spot ETF shares, because in order for them to get exposure to Bitcoin, the only way for them to achieve that is through these ETFs, because they can't buy the actual Bitcoin directly. So in order to enable them to get exposure to Bitcoin, they need to buy into this Bitcoin spot ETF so they can get that underlying Bitcoin exposure on their balance sheet. So this is the reason why these ETFs exist. It's mainly for those corporations, particularly publicly registered corporations. They are the major purchasers of these Bitcoin spot ETF shares. This list, again, I follow this interesting chart. The last time I've seen it, I have to confess, has been a couple of weeks ago. So at the beginning of July, it was 150 publicly registered entities who have made declarations that they own some Bitcoin exposure on their corporate balance sheets. It was 150, now it's almost 200, which is phenomenal, right? And it's completely in line with what I just said before. Every day there's going to be brand new announcements of these publicly registered companies making these humongous declarations, bullish declarations about issuing debt to buy Bitcoin. So since 2 weeks, it's been 43 new entrants in this list. Let's have a quick peek as to what those are. So we know that Strategy used to be called MicroStrategy, has 600,000 Bitcoins as of today, as of July 19th, which is today. This is regularly updated, so I would encourage you to have a peek every now and again. It's called bitcointreasuries.com, a really useful resource. So you can see that strategy has, as I said, 600,000 plus Bitcoins in their corporate reserve, followed by Marathon, which is MARA, the ticker symbol, which is the leading US Bitcoin mining company headed by Fred Thiel, almost have 50,000 Bitcoins in its reserve. We've got now 21 Capital. This is an interesting one because in a couple of other videos explained what they are, right? In addition to them being a Bitcoin treasury company, what they're providing is a whole suite of Bitcoin-backed financial products to provide that yield to its customers, to the Bitcoin holders, without them needing to part away from their Bitcoins. So again, if you subscribe to my channel and tap into those two videos explaining what is and who is 21 Capital, this is actually a firm that's been comprised by Cantor Fitzgerald, Lutnick. As you recall, he is one of the important Secretary of States in the Trump administration team. You've got SoftBank and Tether. Between the three, they've actually formed 21 Capital and is headed by Jack Mallers. As we all know, he's one of the leading veteran Bitcoin evangelists. So he's almost amassed 38,000 Bitcoin. And you've got a heap of other. We've got Metaplanet. We all know about Metaplanet. We all know about Tesla, Coinbase, GameStop, Semler Scientific. Between all these leading companies, they've copycatted MicroStrategy's Bitcoin strategy playbook to issue the debt to buy more Bitcoins in their corporate reserves. And this list, as I said, has been growing quite substantially, and the buck doesn't stop here. We're going to see an awful lot more activity, an awful lot more announcements, such as the ones I've just shown you earlier on, which at some point we're going to have to see this God candle effect, where you're going to be seeing tens upon $10,000 movements in volatility in the Bitcoin price moving forward, because a supply shock is going to be felt hard, particularly for those companies and certainly for those retail individuals and retail investors who haven't yet made their allocation to Bitcoin. They're the ones that are going to be felt hardest the most. So I would really strongly urge you, if you haven't allocated, even if it's just a few $100s worth in Bitcoin, the actual time window is narrowing. So we're going to be seeing the door closing quite shortly. Of course, there's always going to be that volatility, as I explained before in many of my episodes. There's always going to be that upward and downward correction going on. But if you look during the course of its trajectory since 2009, we are seeing this upward trend for many months and years ahead, purely because of this scarcity attribute that it has. There's only going to be 21 million coins out there, and there is a prediction made by Saylor by the time we reach January 2035, so it's 10 years from now, 99% of that amount is going to be mined already. We are in the digital gold rush at the moment, right, for Bitcoin. So if you don't allocate, no matter how small it is, you need to make an allocation that you're comfortable with, that you can just store it in your cold wallet in the long term. For me, it's at least 10 years, and that's the horizon that I've set upon myself. As with many Bitcoin hodlers I've seen, they're pretty much practicing the same time horizon as myself, right? If we move on to this interesting chart that I again regularly follow, it shows you what are the top assets by market cap. A couple of weeks ago, I've seen Bitcoin was 7th place. Now it's actually toppled Google, which is Alphabet, which is the holding company of Google. It's now toppled it 2 weeks ago to 6th place. It used to be 7th, now it's 6th. And again, I mean, there's not much difference between the market cap of Bitcoin and Amazon. We're just talking about what, $50 billion? That is peanuts for Bitcoin. So I wouldn't be surprised if by the end of this month it's going to also demonetize and overtake Amazon. And then Apple, Microsoft, Nvidia, who knows? Maybe by the end of this year, 2025, we're going to be seeing Bitcoin hovering its way up slowly but surely into 2nd place as the 2nd most highly valued asset by market cap. So my prediction would be by the end of this year, Bitcoin will have amassed at least $4 to $4.5 trillion market cap in its Bitcoin ecosystem. 2nd place only to gold. Now, there's an awful lot of talk that it will eventually demonetize gold, but I would see that more in the 10-year horizon, perhaps a little bit sooner, to eventually overtake gold as the most valued top asset in the world by market cap. So this is an interesting table that shows you that Bitcoin is becoming mainstream. It is becoming more of a risk-off asset, so it's becoming less of a risk asset to invest, because as there is that growing capital base, currently it's $2 trillion plus, during the course of time where it's going to grow their capital base, there's going to be less of a volatility effect on it. The more capital you inject, the less volatile it would become. So even if there were to be a correction or a drawdown, we won't be ever seeing those 50% more drawdowns ever. So this is all the more reason why I keep on advocating to investors, newbie investors who haven't yet invested into the Bitcoin asset class, that they ought to do so now. And finally, I want to touch on an interesting real-world asset tokenization coin project, which is Chainlink. Now, what is Chainlink? I used to be a blockchain developer and have actually programmed and built an arbitrage trading bot on Ethereum. It was mostly on Arbitrum, which is a layer 2 on Ethereum network. So I've used Chainlink, so I know what Chainlink is because I have first-hand programming experience of the token itself and what it provides. So Chainlink is more like an Oracle feeder, because the actual predicament of blockchain system, it really lacks that real world life data. It doesn't have any data about, let's say, what's the exchange rate between the US dollar, the euro, or it doesn't have information about the valuations of the real estate as an asset. It doesn't hold that live valuation data in the blockchain. So how does Chainlink close that gap? Well, it does that by providing that Oracle data. So it's an Oracle feeder that takes out that data from the fiat world and injects that into the blockchain system, into the smart contracts to be more specific. Because by doing that, particularly for the fintech players who are creating new blockchains and new tokens, RWA tokens, they need to have real live data somehow in order to provide value to investors on that token. So that's why Chainlink for me must be certainly one of those RWA coin projects that any newbie investor in the digital realm ought to start looking and do their own research. So we're going to be seeing Chainlink getting more immersed into the other RWA coin projects, because they're going to be using Chainlink as that Oracle data feed to help build up those other blockchains in order to give it real life application and value into those other blockchain systems. As I said, by injecting real life data into those blockchains. And Chainlink is an enabler of that. It's just simply an Oracle feed. And that is what this article explains. We are seeing more capital brought into Chainlink as a token, over 7% in the last 24 hours, reaching its strongest price since February amid a broader altcoin rally and US crypto legislation. Again, the ripple effect of the US Genius Act is really huge, right? It's truly historical. So we're going to be seeing the alts picking up. For me, Chainlink is one of the top alts, one of the top RWA coin projects that you ought to start investigating, perhaps allocate some of your fiat wealth into the Link token itself. This is not financial advice. So that's all I would like to share with you today. There's an awful lot that's happened this week, all of which is hugely positive, and the bullish sentiment, it's going to grow, and the bulls are coming. Well, the bulls are already here, right? The only difference is there's going to be more bulls joining the herd in order to leapfrog the crypto industry to that next level adoption in the mainstream. So if you enjoyed today's episode, please don't forget the like button, to share the video to colleagues, friends and family. And if you haven't done so already, to please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology and the future of finance. So till next time.